bring us to our agenda today. I'll start off with a market recap here. We'll talk about what's been going on, and we've got some other things we'll talk about as well. Let's get rid of that slide, and we'll start, as usual, on the S&Ps, which I like to call this the stick save. Um, mentioned yesterday in Jamie's webinar, we had 6 days of a extremely narrow range. It was less than 1%. And that's a pretty tight range when you consider, if we just back out here real quick and see from where we have come since almost just over a year ago. It's been quite an impressive rally. And to beat the dead horse, we talk about each and every week. And again, yesterday, the traders around here, the swing traders, we've just been noticing a really deteriorating underpinning out there. The market would be up 1 or 2%, and your stocks are down 3 to 4, 5% in some cases. And it just really didn't seem like anything was sticking for longer than a day. And it was very hard to find 2 or 3 days of solid movement in one sector or one stock, and before the next rotation came. And then along came today. Really, again, as usual, a long bottoming tail showing that the buyers were not really flinching by the end of the day today. But at one point, market was down below its 20-day moving average and found support pretty much at the bottom of these candles. But it did technically post a close below the 10-day. It fought like hell to get back above that 20-day and did it for the most part in the last 5 minutes of the day, but it did it. But what I want to talk about also is the NASDAQ. And for those of you regulars in yesterday's webinar with Jamie, we were looking at this candle right here, and I said this kind of concerned me a little bit. That was a very definitive no bottoming tail here, red candle close on the bottom in the NASDAQ, which, by the way, has spent the last 2 weeks pretty much in like a 1.5% range. And then so along comes today, and pretty good drop, but well off the lows, giving us a bottoming tail over there as well. But for the most part, kind of in no man's land. So it didn't really give us a whole lot to cheer about. It's probably going to be a cross there in the moving averages tomorrow. I even said yesterday in the webinar that I felt like the price action could very well come back and test that 50-day moving average. Look at where the 50-day moving average met as resistance prior to, pulled back, shot its way through, really just ran out of steam up here, and so it just seems like a logical conclusion that the price will come back and retest that. Maybe today's bottoming tail was enough. I don't know. We'll see what the rest of the week brings. We still got a few days to go here. But that was a bit disconcerting. And, when we look at the pattern, I thought, well, gee, we were ready for a nice little narrow cup and handle there. Well, either the cup is runneth over, or we're just going to build a bigger handle at some point. But I feel like still it could be a test of that flattening 50-day moving average. And then the IWM Russell 2000, again, it's just begging to be labeled, as such. The most obvious head and shoulders, Larry King shoulders action there. But time will tell. It's just a giant mess. I mean, almost 4 months of this now, just back and forth in small cap land. Remember how much fun small cap was back here in the fourth quarter, October, November, December? There was a lot of fun stuff going on. I didn't even go back far enough. There was things popping left and right. And for a few of the small cap players, it's been pretty difficult. Maybe not for day trading so much, the kind of stuff that Barry does, and continues to impress me every day, the things they find in there and day trade. But if you're trying to swing trade and hold on to things for a little bit more movement, it's been extremely tough, especially there in small cap land. So, back to summarize, a wonderful stick save of the buyers. They're conditioned to come in and support this market. Let's see what the next couple of days bring. But other than that, I don't have much else to add. You got anything you want to add, Andy? Hmm. Yeah. Oh, interesting. Hmm. I said it yesterday in Jamie's webinar, and nothing's really changed again today. There's nothing that is making me extremely bullish. I'm not sitting here saying I'm trying to call a top. That's very difficult to do by no means, but I'm also not bullish. So there's no rule that says I can't park my money in cash, or as people know, maybe you don't know, I'm very bullish on silver. And I'll tell you what, let's talk about that for just a quick second. We had the Treasury Secretary come out today and talk about interest rates are probably going to have to go up, and the market got spooked, and so did silver and so did gold. But you know what? They had a wonderful bottoming tail as well. And just going back to yesterday, right there in PSLV, you know, really nice range sitting above all the key averages. And then yesterday, a nice pop, nice little island gap above there. I'll call it island breakaway. Today, a lot of messy noise, but still pretty good recovery there in Silverland. So my point is you don't always have to be invested in stocks. You don't have to be short. You can be neutral. You can wait for your pitch. And being in cash is really, for the most part, where I am right now. And except for a big chunk of that silver position in my 401k. I'm just going to sit back and see what happens. I'm not a day trader. Some people are doing great jobs at pivoting to day trading and scalping, but my daily workflow and habits don't really lend itself very well to that. So I'm not going to try and force a square peg through a round hole. I kind of thought about what we would talk about for content today. I've got something we can talk about. Dave earlier referenced we should be talking about inflation-related stocks because really that's the big talk. I think that's where we're headed. And I think anybody who can look at a data set realizes inflation is here, regardless of what Jerome Powell says when he says it's just transitory inflation threats. I think we're all waking up to that reality. And today, Yellen did the same, and the market got a little bit of a shot across the bow. We'll see how it reacts for the remainder of the week. But I think that's kind of the catalyst in the story of what's going on out there. All right.